Okay, guys, this is my analysis and forecast for this week, um, 17th of October to 21st of October. Okay, so I would start this analysis by reviewing last week price action. Okay, so I'm going to look at my analysis and forecast for last week relative to what eventually played out. Okay, so let me head over to YouTube. Okay, so this was my analysis and forecast for last week. So I'm just going to go straight to, I have a timestamp here to show what I was expecting um, based on last week's price action. Okay, then we'll look at how that played out. Okay, I think this is for ES. I wanted price to tap into this fair value gap and then reject from there to target the weekly imbalance. And I also mentioned from my review last week that price may also reach into this balance price range. This is an old fair value gap on the daily time frame that didn't hold price. Okay, price just simply went through it. Okay, so normally you would expect a return, or if there is a return to that balance price range, once it fills it, you would always expect to get a rejection from there. So this was my analysis from last week. So let's go back to trading view and see what played out on ES. Okay, so this is eventually what played out. This is let me go to the 1 hour time frame since I was using the 1 hour time frame. Okay, so this is the imbalance that I mentioned in the video. Okay, price tapped into it as I was expecting, and it dropped and came for the weekly fair value gap. Okay, I couldn't go short here. I couldn't go short. I was looking to go short on Monday, but I already zeroed my mind that I wasn't going to trade on Monday because normally I like to wait for Monday's price action to play out and then I see what happens after. Okay, so I was waiting to see what would develop on Monday. I didn't go short here, but during the on Tuesday as well, I was looking to also go short when price trades back into this 1 hour order block. Did so here. I wasn't on the chart and I couldn't go short here as well. But I was able to catch the CPI news release. I went short just above this high. Okay, so I went short here. I took 50% profit here with the expectation that price is still going to expand lower to fill the fair value gap. Okay, so and perhaps a continuation lower to 3,400 level. That was what I was expecting, but fortunately, the CPI completely reversed. Okay, I've never seen anything like this before, okay, since I've been trading. An intraday reversal like this, I have never seen it. Okay, so nobody was expecting this reversal. Nobody would have anticipated this reversal. So it reversed against me. Unfortunately, I didn't even break even and it took me out and ultimately went for that balanced price range that I also mentioned in the video. You can see it filled it and then rejected. Okay, here too, I was looking to go short, but I wanted to see if price would reach for this vacuum imbalance on the daily time frame. I don't want to go to the daily time frame to show you that, but you can check it from your end. There is a vacuum imbalance, or I said vacuum volume imbalance on the daily time frame here that was waiting. I wanted to see if price can tap into it and you know I would go short there, but it didn't, and it just rejected, and I missed the move, and I didn't want to chase price. Okay, so um, the analysis for ES or US 500 was spot on. Exactly what I was anticipating was what played out. Price tab into this 1 hour fair value gap, dropped, came for the weekly fair value gap. There was no follow through, there was reversal, and came for this balanced price range and rejected from there. Okay. So before we look at what is likely going to play out for next week, I think let's also check out um, Euro USD and Pound USD. Okay, so let me go back to YouTube again to check out my analysis for last week. Okay, I'm back on YouTube. So let's go to Euro Pound. So this was my analysis for Euro Pound last week. I wanted price to tap into this imbalance, 15 minutes imbalance, and reject to fill the daily fair value gap and take out this previous day low. Okay, so let's go back to trading view and see how that's played out. Okay, so I'm back on trading view. This is Euro Pound. Let me see if I can still get the this. Okay, so my expectation was for price to tap into this imbalance. It did so here. Unfortunately, I couldn't go short here. I couldn't go short. I missed this move because it happened after London closed Q zone and sorry, after New York Q zone. And normally after New York, I don't really like to take a fresh position. My expectation was that price is probably just going to consolidate because we already had a move in the morning. So my expectation was that price would consolidate somewhere around here, and then the next day I would look to um, go short, but it reversed immediately. And when we got these retracements, I was looking to go short here. I actually did one short. It's played out, did like 1 hour, and then it reversed. The next day, it took me out. So I had a loss here. And I also went short somewhere around here, but when price wasn't moving, I had to close it. And um, I also took this short. I took this short during CPI. Okay, so the money I made last week was basically from the CPI news. Okay, so I couldn't catch this initial move. Um, I could have made money here. Okay, I could have made money. Exactly what I was anticipating was more or less what happened. Price tapped into the imbalance and then rejected. Okay, so this would have given me something reasonable if assuming I just simply went short and not think or expect that price is going to like just consolidate and look to enter the next day. Okay, so the analysis was quite all right, but I wasn't so happy with my execution. Price came to into my sell POI, but I didn't execute. I was looking at it live, but I felt like it was already late in the day, and I was expecting some kind of consolidation till the next day. Okay, so that didn't happen, and I ended up having a loss from Euro Pound. I mean from Pound USD. Okay, so let's check Euro USD. I don't think I even need to go back to YouTube since I think I have the arrow here. I think this should be it from last week. Is it this? I don't think it's this. Okay, for Euro USD, we had this daily imbalance. Okay, there was a daily imbalance. You can see this is the low, this is the high. My expectation was for price to tap into this daily imbalance, and from there I would go short, but I didn't get a move into this imbalance. On Monday it created another imbalance. So we have an imbalance, a daily imbalance. This is a low and this is a high. Okay, so I was looking for price to trade into it so that I can go short as well. Around the same time that um pound USD traded into this imbalance here was also around the same time that Euro USD traded in here. So I couldn't catch this move. And during CPI, I was able to catch this short on CPI. Okay, so we had this retracement. I was both short on um, Euro USD and Pound USD, but Pound USD took me out eventually. While Euro USD played out, I took 50% profits in this 12-hour fair value gap, which I also mentioned in my analysis from last week. So it wasn't really bad. At least I made money. I did 4% last week from my analysis. My bias was quite wrong for last week. Okay, my bias was bearish. I was expecting bearish continuation last week. I did make money, but despite having a wrong bias, but eventually this is a seek and destroy profile. Okay, so on Euro USD last week, this is basically a seek and destroy profile. A seek and destroy profile is basically a profile where price just keeps on running shallow stops above and below the intra-week high and low, and then on Thursday we get a an explosive rally, and then at the end of the week price then returns to the middle of the consolidation. So this is a classic um seek and destroy market profile. Okay, let me show you on my notion. um okay, so this is the seek and destroy profile. You can see this is like Monday it basically consolidated Monday, Tuesday, Wednesday. Then on Thursday it drives lower, run the intra-week sell side liquidity, and then expands higher into Friday, and then at the end of towards the close of the day it drops to the middle of the consolidation. So this is pretty much how the seek and destroy profile looks like. One thing that is typical is that price will usually return back to the middle of the consolidation. So this was why I posted on the Telegram channel on Friday morning, no, on Thursday during London close, I think that we're likely going to get a reversal on Friday, which we um which we eventually got. Okay, so you can see the Friday reversal. I didn't catch this short. I already made money on Thursday from the CPI news, and I didn't want to give anything back to the market, so I just stayed on the sideline. Okay, so well, looking at the what eventually played out, if I'm going to rate myself, I think I'm going to give myself a 5 out of 10. Okay, my executions were just a little bit poor because um, especially when price traded into this POI on Europe on Pound USD, where I was looking to go short and I didn't take it. I was looking at it live and I didn't take it. Okay, so this would have given me something, something worthwhile for the week. Okay, even though it did eventually, it filled the daily fair value gap I mentioned in the analysis, but it didn't come for this low. Okay, at least I could still have made something tangible shorting from here to here, right? And on US 500, I could have just placed a limit order here, go short and hold it till it reaches for the objective. Okay, and here as well, this was my target. So I should have gone short here. I didn't go short. I was still waiting for price to tap into this volume imbalance. So I wasn't really too happy with my executions from last week, but we have another week in here, and hopefully my analysis would be better, and hopefully my executions too would be better. Okay, because it's one thing to know what price is likely going to do. It's another thing to execute on it and make money from it. Okay, so let's go into this week's analysis. Okay, let me get rid of this. Let's start with DXY. Okay, this is DXY. Let's go to the daily time frame. This is DXY daily time frame. In my analysis from last week, I mentioned that I made reference to this fair value gap. Okay, this is Monday's price action, I think. Or was it this? This is Monday. Yeah, this is Monday price action. Okay, this price was trading here when I mentioned that we're likely going to form a fair value gap on Monday, and that I wasn't expecting price to trade into this fair value gap because of a reclaimed block on the, was it 1 hour time frame or 4 hour time frame? Okay, so ultimately the fair value gap formed as I was anticipating, and price traded into it, and we had that a bullish um price action. We have this response from it. Okay, so what I'm expecting for this week is that, here this is an order block. This is a daily order block, right? And when price traded below this candle's low, this becomes another block. And so my expectation is that we'll probably get a bit of rejection here to capitalize on this fair value gap. Okay, so my expectation is that this fair value gap is going to be filled this week. Maybe we'll consolidate on Monday or probably drive down on Monday, and then on Tuesday we form the low of the week, and then we rally back up. This is also a daily bullish order block. Okay, this is a daily bullish order block. So my expectation is that price is going to drop down into this fair value gap, form the low of the week around this level, and then rally up to take out last week high and potentially this high. Okay, so that's what I'm expecting for DXY. So let's go to the 1 hour time frame to see what we can work with. Okay, so price is currently inside this breaker. So my expectation is that we'll probably get some kind of three tap setup, maybe something like this, and then a drive lower into this daily fair value gap, and then we have a shift in market structure, and then we form a low of the week somewhere sometimes on Tuesday or Wednesday, and then we rally back up to take out this high. Okay, and potentially continue higher to take out this high. Okay, the September high. Okay, so that is what I'll be expecting for DXY. A drop lower on Monday, Tuesday, and then on Wednesday. By Wednesday, I expect the low of the week to have formed. Okay, so by Tuesday, probably Tuesday or Wednesday, I expect the low of the week to form somewhere around this fair value gap, and then we rally higher. Okay, so let's go to Euro USD. Let me delete this. Let me delete this as well. Okay, and this, and this. Okay, so on the daily time frame, let me go to the daily time frame, okay, so that you have a big picture perspective of what is likely going to unfold. So on the daily time frame, we have this fair value gap. Okay, so this fair value gap right here is the first draw liquidity. Okay, and we have relative equal lows somewhere here on the low time frame. Okay, Obviously, this is also a relatively poor high. I mean, relatively poor high rather, not relatively poor low. This is a bullish order block. It is an indecisive candle, but it is still a bullish order block. So I'm expecting a reaction from this bullish order block to trade higher into this daily fair value gap and then get a rejection there, then trade lower to take out last week's low and potentially the low that formed in September. Okay, so let's go to the 1 hour time frame. On the 1 hour time frame, market has opened already, so my expectation is that price is probably going to drive lower. We have this trend line liquidity here. If it goes to the 15-minute time frame, it is going to be more obvious. Okay, so we have this trend line liquidity here, and my expectation is that price is probably going to, drive. We also have an imbalance here, right? We have an imbalance here. My expectation is that price will probably going to drive lower to fill this imbalance and then trade higher into the daily fair value gap and then rejection from there to take out the low of last week and potentially the low that formed in September. So let's go to the 15-minute time frame. Okay, so this is a 15-minute time frame. We have this 15-minute fair value gap in here. So my expectation is that we probably get something like this. Price probably going to drop into this fair value gap, this other block as well, form a shift in market structure, and then some kind of rally to the daily fair value gap and rejection from there to trade lower, fill this, take out this low, and we may get a bounce. We may get a bounce from this 12-hour fair value gap. Once it fills it, we may get a bounce. Okay, so this will rather be my minimum target. This will be my minimum target if price trades into this daily fair value gap. Now, if we look at this is relative equal lows that I mentioned on the, can see it from here. This is a relative equal lows. Okay, so I don't think they will leave this. Okay, I don't think they will leave this. And we have some kind of trend line liquidity here. Price has swept some of the liquidity last week. Okay, it left the equal highs. Okay, so my expectation is that this week we will get a sweep of this equal high, probably. Okay, now let me quickly say this. Whenever you have a daily fair value gap or a higher time frame fair value gap, be it daily or 12-hour or even 4-hour time frame or weekly time frame, and you see equal lows before the daily fair value gap, that daily fair value gap becomes an extremely high probability PDRA that you can go short on. Okay, in this case we have, this is a liquidity pool. Okay, we have a pool of equal highs below a key PDRA, okay, which in this case is the daily fair value gap. Whenever you have this is extremely high probability. Okay, whenever you have liquidity pool before a key PDRA, a fair value gap, another block, a breaker, whatever, okay, that PDRA becomes an extremely important PDRA. So if we're able to get this, maybe drive lower to fill the rest of this fair value gap, it might not drop this low, and it might, okay, to fill the rest of this fair value gap and then drive higher to clean this high. This would be the Judas swing for the week. Okay, this move higher for me would be the Judas swing for the week, and then drop lower. Or no, you just never know. They might just leave this. Okay, when we have things like this, I mean, if they wanted to take this, they would have taken it here. So I really don't understand why this equal high was left behind and the fair value gap was left behind. But my expectation would be for price to drop lower to fill the rest of the imbalance, to form a low on Monday, drive higher on Monday, Tuesday forms a high of the week, on Wednesday, okay, form the high of the week. So I'll be expecting either Euro, EU, or um, the pound USD to form its low on Tuesday or Wednesday. If Euro made its own high on Tuesday, I would expect the pound USD to form its own high on Wednesday to form some kind of SMT divergence. So that is my expectation. This is my expectation for Euro USD for this week. So the profile that I'm expecting to play out for this week on Euro USD is either Tuesday high of the week or okay, let me, so this is what I'm expecting for Euro USD. This Wednesday high of the week or Tuesday high of the week. Okay, this or this. Okay, so drive higher on Monday, Tuesday, form the high of the week, and then drop lower. Okay, so something like this is what I'm anticipating, either Tuesday high of the week or Wednesday high of the week on Euro USD for this week. Okay, so this week we can expect to see a bit of expansion because last week was basically a consolidation week. Seek and destroy is like a pause between two large price swings. Okay, so let's move on to the pound USD. Okay, similar to Euro USD, here we do not have a we don't have, what's it called, we don't have fair value gap that we can capitalize on or that we can work with. Okay, so let me remove this. But we have these relative equal highs. Okay, automatically these relative equal highs becomes a draw on liquidity for the week. Okay, so we have a gap in here. Okay, market opens with a gap, so that is very significant. When you have a gap up, that is significant. That is telling us that price is poised to trade higher. Okay, so if we get a feel of this void, okay, and perhaps during Asia and London open Q zone, if price can trade lower to fill this imbalance and then drive higher to clean out these relative equal highs, and then I can then take a short somewhere around here to take out last week low and potentially this previous day low. Okay, so that is, and ultimately this level. Okay, if we get a big range for this week. Okay, so what am I expecting? Let's go to the 15-minute time frame so I can draw my arrow. So my expectation is that we will probably, price probably going to consolidate somewhere around here, fill this gap, and during Asia or London open Q zone, you guys swing to the downside to clean out this imbalance, and then break market structure and drive higher to clean the relative equal highs, and then perhaps we get some kind of break in market structure then I can frame a short around that level to clean the um last week low and this previous day low. Okay, so this is my expectation for this week on pound USD. Okay, so I'm looking to see if we get some kind of Judas swing to the downside to this fair value gap, and then I can frame a long entry here to this relative equal height. Okay, and then from there I can take a short entry depending on what it can just take out this high and continue higher. But I'm not expecting that to happen. I'm not expecting that. I expect that there should be some kind of rejection around here um on Tuesday or on Wednesday. Okay, so this is my expectation for the pound USD for this week. Okay, so my one short one Q will be a short from here, and then I'm going to hold it for the rest of the week. Okay, so this is where I'll be taking off majority of my position. Okay, this previous day low. Yeah, okay, so that's that on pound USD. Now I love euro pound daily time frame. Okay, it looks quite interesting. Okay, we have a gap lower here as well. If we go to on the weekly time frame, we have this imbalance. So this imbalance is the draw on liquidity for this week. So I'm expecting that if we go to the daily time frame, we see this imbalance right here. So my expectation is that we'll probably get a move to the upside to fill this daily fair value gap and then drop lower to this weekly fair value gap. Okay, so I'm expecting this move. I'm looking to go short on euro pound around this level and then target this weekly fair value gap. And if this happens quickly in the week, if price trades into this weekly fair value gap early in the week on Tuesday or Wednesday, then I will look to frame a long here to take out this buy side liquidity. You can see on the weekly time frame it is more obvious. You can see this buy side liquidity. So I'm looking for price to trade higher into this level, drop down to fill the fair value gap, and then from here I'll take a long to target these relatively poor highs after taking a short from here to here. Okay, so that is my expectation for euro pound. Okay, so let's check ES. For ES, I like this imbalance we have here. I love this. Okay, I like this. So my expectation is that we'll probably get a. Okay, I didn't draw my arrow for this one. So let's go to the 15 or 30-minute time frame. So my expectation is that we are going to get something like this. Close this gap, tap into this fair value gap, and then drop lower to fill the weekly imbalance, and then we'll probably get a shift in market structure somewhere around this level and to target this last week's high and potentially even trade higher into the buy side relative equal highs on the weekly time frame. Okay, so that's that from me on euro pound. Okay, so US 500 on the 1 hour time frame. I don't want to go to the daily time frame. Okay, so let's just work with 1 hour. On the 1 hour, we have this imbalance right here. We have this breaker. So I'll be looking to see if price can trade into this breaker, right? and this fair value gap, price can trade here, and then I'll be looking to take a short from around this level to fill the rest of the weekly fair value gap. Okay, and perhaps we might get a bounce from there. Okay, and we may also get a move back into this volume imbalance. Okay, price might take out this high, fill this volume imbalance before it drops. Okay, so this is a very big possibility. Price can, trade down, reach this level, and then drops in here. Okay, so that's my that is all from me. Now, okay, I promise that I'm going to touch briefly on the fundamentals of EU, GU, foreign currencies relative to DXY. Okay, somebody asked on the Telegram channel, and I thought I should shed a bit of light on it. Okay, so the reason why I have been bearish on Euro and the pound and bullish on DXY is because of the macroeconomic status of the United States right now. Okay, we know that inflation has set in, the prices of goods and services have risen, and the Feds are trying to correct that. Okay, and the result of their action during the COVID-19 pandemic, when they kept on printing new notes, they kept on printing new currencies. They kept on printing money basically, so obviously that led to inflation, and now they are trying to correct it. And the way they are trying to correct it is by raising the interest rates. Okay, the interest rate is basically the interest rate that banks they charge when people want to take loan, maybe mortgage loan for whatever reason. Okay, so if they are raising the interest rate, the implication is that people will not have access to loans, easy access to loans, since the interest rate is going to be high, and as a result of that, there will be a slowdown in the economic growth, and ultimately um um the inflation will then drop down. Okay, another thing they are trying to do, aside from increasing or hiking the interest rates, is that they are doing quantitative tightening. Okay, tightening is basically the opposite of money printing. Okay, when they are printing currencies, are putting more money, giving more money to the people, handling more money to the banks. Okay, so there is more money in circulation. If there's more money in circulation, people would not want to work. Okay, so there will be an increase in more jobs. There will be more jobs, but people would not be willing to work. Okay, because they have access to money, they have access to loans, and um, this is why the metrics like unemployment rates and things like that are important. Okay, so I'm just doing um a general overview of the fundamentals, for those of you who probably do not know how to look at it. Now, the most significant thing, what you really need to know is the interest rates. What are they doing? What is the Federal Reserve? What are they doing to the interest rates and other, the governors of other banks? Okay, for example, the BOE, what are they doing to the interest rates? Okay, this is what you need to know. When interest rates is going up, market is going to go down. Okay, the interest rate is directly correlated to DXY. When I increase interest rates, the dollar is going to gain strength. Okay, it is going to go up, right? Because it is the reserve currency for pretty much all the country. Okay, so if they're increasing interest rates, the dollar is going to go up, everything else will go down. Okay, so BTC, Euro USD, Pound USD, all the foreign currencies, they will all go down. As long as they continue to hike the interest rates, markets will continue to go down. Okay, it will not change. The market will not change direction until they pivot, and they will only pivot if the inflation drops back to 2%. Okay, currently the inflation is at 8%. The CPI release is basically what they use to measure the inflation. Okay, so it came out at 8.2% last um last week, okay, which is an extremely high number. That's probably the highest that's been for years. Okay, so that's an extremely high number, and that suggests that the Feds are likely going to increase the interest rates again next month when they have their meeting. Okay, they have their meeting every 2 months. Last one was last month. The next one is next month. Okay, so the FOMC for next month, that's when they are going to announce if their decision, okay, whether or not they are going to increase the interest rates or not. Okay, so if they increase the interest rates, you can expect more decline in the market. Okay, so the market will continue to go down as long as they increase the interest rate. And once they begin to lower the interest rates, DXY would top and begin to drop, while foreign currencies will bottom and will begin to rise up. Okay, so the key metric here is the CPI. The CPI is basically what we use to measure inflation, which is currently high at about 8.2 from the last release. So that tells us the higher the inflation, markets will start dropping, okay, because they will continue to increase interest rates and they will continue to do their quantitative tightening, which is like the opposite of um, printing money. Okay, so basically they want to drain liquidity from the market. They want to remove money from the economy. They want to drain the economy of liquidity. Okay, so I know people lose more money in a bearish market, right? Most people buy, most people invest in BTC, cryptocurrencies, stocks, S&P and the likes. Okay, so in a bearish market, generally more people would lose money. So they are doing that is basically what they call quantitative tightening. They're trying to drain money from the market via different means, and a huge amount of money. They're trying to drain a huge amount of money from the market. So that's basically just a broad general overview of the macroeconomic status of the market right now. Okay, so we are extremely bearish. The market is bearish. This is not going to change anytime soon. Okay, in my opinion, as long as the interest rates is still going up, as long as the CPI numbers is not improving, okay, as long as the Feds continue their quantitative tightening, I don't think that the market is going to bottom. Okay, so once the Fed pivots, they stop the quantitative tightening or they begin to print money again, um, and then they start lowering the interest rates, that is when the market is going to bottom. Okay, the interest rate is the number one most important thing that controls the whole of this market. Okay, all the while that BTC was going up was last year or 2 years ago, it was simply because the Feds were they were printing money. Okay, basically they are doing the opposite of what they are doing now. Okay, so the United States is basically what control the whole market in quotes. Okay, the actions of the Federal Reserve of the United States basically determines what happens in the market. Okay, so if they are increasing interest rates, the market is doomed to go down. Okay, once they stop to increase interest rates and they stop their quantitative tightening, then that's when the market would recover. So there is really no hope right now for BTC, for cryptocurrency. That is why I haven't invested in crypto. I've been waiting. I bought some, was it 3 months ago before that bounce that happened in was it around June or was it May? I can't remember, and I took profits. I sold all of them and I haven't bought again since that time. Okay, except from the cryptocurrencies I have bought since. Okay, I bought some crypto last year and on spot, which I am still holding on to. Okay, I bought them. I don't intend to sell yet, as at that time my understanding of the market, is nothing compared to what I know now. Okay, but since then I haven't bought any more crypto, and I don't intend to buy anytime soon. Okay, when I start to DCA on crypto, I'm going to post it on my Telegram channel. Okay, I'm going to give an update, but right now everything is not looking good for foreign currencies, for crypto, for risk assets. It is not looking good at all. And I've mentioned a few times where BTC is, where the DXY is going to. Okay, so I know for sure that DXY is likely going to um take out this high. Let me go to the monthly time frame. DXY is likely going to take out these relative equal highs. Okay, so I believe that this is the ultimate destination for DXY. So 120, 121, 124, somewhere around this level. Okay, it will get there, guys. It will get there. Because if we do a measured projection from this low to this high, um, this is the measured move, and this is 2.5. For a prolonged move like this, most of the time price tends to end at the 2.5 level. Okay, so wait and see, but until the DXY trades into this level, so I'm expecting that this is probably when the Feds will begin to pivot. Okay, when these relatively poor highs are taken, and after that they will be targeting these relatively poor lows. But that's still a long time away from now. All right, I will hope that you've learned something um from my analysis for this week. I added a bit of educational content. I hope you learned something from there, especially the fundamental part of it. Okay, so if you have questions, feel free to drop them in the comment section, or you can also drop your questions on the Telegram group chat. Okay. All right, I'll see you in the next video.